All right, I was muted there, guys. What's up? Ansel Linner, Bitcoin and Markets, CPI Day. We're going to live react to the CPI drop in the United States. We're going to go through a few things prior to that, though. So let me pull up my screen and share this. Where are we going? Okay, here is bitcoinandmarkets.com. You guys are aware of that. Oh, man, I am all over the place now on my stuff. Why is this not working properly? Stand by. Okay, this is where I want to go. Bitcoinandmarkets.com. This was a report yesterday. We went over that live read through of that. All sorts of content there. You can find bitcoinandmarkets.com. Okay, CPI today. We're going to read through this quick little snippet from Zero Hedge. CPI preview. There's a genuine risk inflation will come in hotter than expected. And we are waiting for this. This is going to be at 8:30 a.m. Eastern time. It's at 8:25. So we have 5 minutes till the drop. While it's not expected to be a major market mover, certainly not compared to the shock CPI prints of 2022 and earlier in 2023. And the big one was October of 2023. That was the biggest shock that I can remember of this whole cycle. It came in really below expectations. And so the market gapped higher on the October CPI drop. Tomorrow's inflation print could lead to quite a few stop outs if it comes in hotter or cooler than expected. Now, you guys know me, in a deflationary environment, we should always expect cooler than usual. This month is a little bit interesting because there is a little bit of kind of reacceleration going on out there in the market. I wouldn't say it's a tremendous amount or anything, but and of course we're heading into the end of Q1 with the banking crisis and all that. So, but there is an opportunity for it to come in hotter than expected. So, okay, headline CPI is expected to slow in January, rising 0.2% versus 0.3% in December, which, however, was revised to 0.2% after last week's seasonal adjustment revision. So they did revise December down by 0.1%. And it might have been because, you know, that's rounded. So if it's 0.3%, it could be 0.26, and they revised it to 0.24. And so then they round it down to 0.2 instead of up to 0.3. I don't know exactly, but it could be a very small change in the actual revision there. While core CPI is seen rising 0.3% month over month. I like how they're doing month over month and not year over year. I wish they would have done that 2 years ago, matching the 0.3% December increase. There is little dispersion between the estimates, with the highest core CPI forecast at 0.4% and the lowest at 0.1%. Okay, great. Now let's go to what they're thinking over here at the Inflation Nowcast. This is the Cleveland Fed. We have 3 minutes till CPI drops. And they're thinking January 0.13. So that's below the estimates there that Zero Hedge was saying. I want to point some of this stuff out. So if you scroll down here, let me go to month over month. And this is for February. We go into January. You can see that it has been revised down consistently until just a couple days ago. They revised it down once again. We can go to things like December and months like, let's see, let's get a good one here. That one's not so good. Okay, so this is a good one to show. Their estimate was up here at 0.3 for core PCE, and it came in all the way over here at 0.16. CPI headline, they estimated at 0.07, and it came in at 0.04. It's a significant miss for being that small, right? This was a miss as well, and the blue one core CPI was also a miss. So they don't have the best track record. They're consistently estimating higher. So again, in a deflationary environment, we should expect possibly below this, but I reserve the right because it is kind of an interesting month. Just this month, maybe February, but as we get into March, I think CPI is going to be consistently missing low. All right, let's go over here to the BLS website, and this is where we will get the numbers. Let's refresh. Still December, 8/29. Let's take a look at the markets real quick. Share this tab. Bitcoin 49,800. SP 500 futures 5,023. Those are what we will be watching. Maybe even the US 10-year coming in at 4.16 right now, and the DXY at 104.32. Okay, I think it might have dropped because I saw the numbers kind of ticking a little faster. So let's share this. Here we go. CPI for all items rose 0.3% in January, shelter up. Now, before I click into this, we're going to read through some of the important parts. Shelter is this sticking point. The way CPI measures shelter is very, very slow. I think they do the best that they can. I mean, there could be some funny business going on. I think there's a little bit of funny business going on in the jobs numbers. But this one right here, shelter is not designed to give us quick response time. That's why I introduced Trueflation on the newsletter yesterday. Trueflation is a daily CPI. It's showing it's down at 1.3%. This is the actual CPI is still up at 3%. So let's jump into this. Here we go. Consumer price index for all urban consumers increased 0.3% in January. But remember, the December number was revised down. Perhaps the January number will end up being revised down. But this is what we have for now. So December was 0.2% after the revision. Over the last 12 months, so year over year, all items index increased 3.1% before seasonal adjustment. Now, a lot of people think, okay, CPI is sticky right here, and that means that the Fed will not cut rates. All right. I don't really think, I know that Powell says he has to be confident that inflation is coming down. Well, if inflation is at 3%, where it was at 7 or 8 or 9%, if quote unquote inflation, if the CPI and the PCE are coming down and being sticky around 3%, I think that's confidence enough, and also he has to have confidence that the economy isn't sliding into recession. That's another big sticking point that people forget is their dual mandate, stable prices, and maximum employment. So the inflation is stable prices and unemployment is maximum employment, or recession is maximum employment. Not going into recession is maximum employment. And last month, at the January FOMC meeting, Powell introduced a new word into the statement, and that's balance. He used it twice in the written statement, and he used it several times in the press conference as well. He's talking about that dual mandate is coming into better balance. So they're fighting inflation. That side of their dual mandate is getting more weight. All right. Now it's coming into better balance. And he is considering more, not just inflation anymore, but also the recession piece. Okay. So just because this came in at 3.1% year over year and 0.3% month over month, that doesn't necessarily matter to Powell. But we'll take a look at the markets here in a second. The index for shelter continued to rise in January, increasing 0.6% and contributing over 2/3 of the monthly all items increase. So if they had a better measure for shelter that was was quicker and more sensitive to actual conditions, this would be 0.1%, not 0.3. So the shelter, most of these last few, I think maybe even over the last year, shelter has contributed about half of all the increases. Now it's 2/3. That's very interesting. Okay, the food index increased 0.4%, as food at home increased 0.4%, and food away from home rose 0.5%. Stop eating out, people. In contrast, the energy index fell 0.9% over the month due in large part to the decline in the gasoline index. And the natural gas prices are plummeting as well because Biden closed the exports terminals, right? The index for all items less food and energy, so that's core, rose 0.4%. That's over expectations. Indexes which increased in January include shelter, motor vehicle insurance, and medical care. The index for used cars and trucks and the index for apparel were among those that decreased over the month. All items index rose 3.1% for the 12 months ending January. Okay, I want to make sure that I am going out on this. Sorry, guys. I am going to. Where am I at? Oh, there it is. Okay, sorry. Let me go back. I had a sinking feeling that I wasn't sharing the proper thing. All right. Almost done here. All items less food and energy rose 3.9% over the last 12 months. The same increase for the 12 months ending in December. So for core, didn't change. Index decreased 4.6% for the 12 months ending in January. And the food index increased 2.6% over the last year. All right, let's go into the table here and shelter down here. You can see it increased from 0.4 to 0.6. So 0.5, 0.3, 0.6, 0.3, 0.4, 0.4. People were thinking, okay, it's coming down. Nope, 0.6 here in the last month, this month. But shelter does not have a mind of its own. It will follow the rest of the index, especially as we go into recession. Okay, let's take a look at the charts. DXY jumping higher. Let's go down to the 5 minutes, see how it reacted. Look at that. Look at that candle. Oh my goodness. I'm going to snap that and share that with Telegram because I'm not sharing my screen over there today. Here we go. Oh crap. I'm still muted on Telegram. Sorry, fellers. All right. DT, Larry. Sorry, guys. I'm back here on Telegram. God bless it. I need to have a checklist when I go through do my live streams. But okay, so that's DXY. It is screaming higher. S&P 500 futures down slightly, but not significantly. Oil, nothing. Gold down big. Let's take a look at Bitcoin. Bitcoin down a little bit as well, not as significant as gold. Let's take a look at this. So gold is down. That's pretty big, if you ask me. And what's the percentage on this? 0.5% in the first 5 minutes, and Bitcoin is down, well, 0.5% as well. So let's zoom out here on Bitcoin. We had decent inflows yesterday. It was like 480 or 490 million dollars coming into the Bitcoin ETFs. That was down slightly from last Friday, but that's a good way to start the week. That's probably the best Monday that we've had for flows, right? So we'll see what happens today. Most likely, the reaction to this CPI is going to be higher for longer. People are going to think the Fed is going to stay higher for longer. So let's see what it's the 10 years looking like. 10-year jumped over this horizontal resistance we were watching. But we'll see. Remember, for rates to continue higher, we need growth. If rates just spike, that's a panic move and it will reverse. So we don't have any growth to speak of, really. I mean, yeah, GDP came in decent, but overall, there is, GDP came in decent because government spending, and government spending crowds out actual growth. Government spending growth is not real growth. So if for rates to continue higher, they need actual growth, and I don't see that anywhere in the economy right now. So I don't see how there can be a sustained move higher in interest rates right now. Okay. Back up to Bitcoin. That's going to be it for today. Let me go check out the comments. If there's any comments from the live stream, nothing in there. Let's check out Telegram. YouTube thumbnail and title artist. Oh my goodness. I thought I updated it. Oh yeah, it should be good to go, man. YouTube thumbnail should be the same, should be the new one. All right. One more check of all the different comments. Nothing I'm seeing. So, okay, guys, CPI came in hotter than expected, 0.3% month over month after a revision in December from 0.3 down to 0.2. Uh, Year over year did not change, and core did not change. So, we will see what the market reacts. It's kind of a nothing burger here, a little bit on the CPI. Um, Overall, this doesn't take us out of any sort of progression in a pre-recession period. We will not avoid recession because of this. This is not like showing any real growth out there in the economy that is going to pull us out of the path that we are following into recession. So um, that's all I have for that. All right, guys, thanks for joining me, and I'll see you